As you can see, time is around 10:28. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. First, let's look into Bank Nifty, guys. You can see here that the market gapped up yesterday with some very huge momentum towards the upside, and the market closed above the upper limits, clearly signifying some sort of bullishness. And you can see following day also, that is on today, the market gapped up. You can see the market gapped up at around 236 points, clearly signifying some sort of bullishness. And after gapping up, the market showed some kind of rejection candle towards the downside. You can see a huge rejection candle, guys. And in case if the market would have broken towards the downside here with a huge momentum, you could have expected the market sentiment to be bearish. But you can see here, guys, the market here showed some kind of rejection candle from the upper levels and kind of retraced to the mid of the first candle and trying to head towards the downside. But here, what you can see here is the market failed to make a lower low or break structure towards the downside. You can see the market here. Instead, the market rejected price from the 9 moving average and closed above the 9 moving average, clearly signifying some sort of bullishness. You can see, guys, price rejecting from the 9 moving average and closing above the 9 moving average, and market failing to close below this level. You can see the market failed to close below this level, clearly signifying that there is some kind of support here. And after this, you could have expected the market to reject price from this VWAP levels and continue further selling towards the downside. But what happened is that instead of rejection of price from this here and price continuing towards the downside, the market actually broke structure, breaking the VWAP towards the upside, clearly indicating some sort of bullishness. So you could have easily entered after this kind of candle, guys. Very huge bullish candle with a very good imbalance or impulsive momentum towards the upside. This is one entry where you could have taken. In case if you might have missed out on this, you could have expected the price rejecting from these levels, or you could have expected some kind of retracement from these levels. So you can see this kind of rejection candle engulfing pattern over here, clearly engulfing the previous bullish momentum. So what you could have expected is that in case if another bearish sentiment would have been, the market would have rejected price from these levels and a wick above, and price would have closed below this candle low, guys, clearly signifying bearishness. But what you can see here is that after this kind of bearish candle over here, you can see the market closed above this candle itself and broke even the high, clearly signifying there is a bullish sentiment in the market. So the first entry where you could have taken is here, guys, after seeing this kind of huge bullish candle over here, keeping your stop loss just below the VWAP and targeting towards the upside. And the next candle was this candle. After this, the market failed to make a lower low or break below these levels. Instead, the market broke towards the upside. So you could have entered at this candle close, keeping your stop loss below that candle and targeting towards the upside. For target levels, guys, what you could have considered is the swing levels over here. You can see uh, this is the swing low. So what you could have considered is the common point between this to the common point between this. So you can see clearly the market came all the way to 2.61 level. Or you could have just traded, guys, as long as the market is trading above the 9 as well as the 21 moving average. You can see clearly the market is here trading above the 9 as well as the 21 moving average. Here, the market showed some kind of impulsive momentum towards the downside, but again failed to close below the 21 moving average. Instead, again, the market continued further bullishness. So you could have, after this, you could have tried your stop loss to this level. And after this, you could have tried your stop loss to this level. And after this kind of bullish momentum, you could have just tried somewhere here, guys. So you can see after this rejection candle is where you could have exited your position. So you could have made a decent profit. They say 100 per 100, a premium of 100 rupees. You could have easily made. So you can see the market moved around 240 points, clearly signifying some sort of bullish momentum itself. So this was one trade where you could have easily captured, guys. You can see. And what happened here is that the market clearly broke structure here, rejecting price from these levels, and the market clearly formed a chalk over here. You can see this is a clear chalk formation. And what you can see here is that this candle over here, guys, the rejection candle where the price rejected from these levels and closed below the 9 moving average, clearly signifying bearishness, and another rejection from 21 moving average and closing below the 9 moving average and closing below the 21 moving average, clearly signifying bearishness. And before that, guys, you can see a pattern formation over here. This is a clear channel pattern formation over here, indicating the market sentiment is very bearish. So what you could have done is to take short position here, keeping your stop loss just above that candle and targeting all the way towards the downside. So what you could have targeted is the liquidity over here, or you could have targeted all the way to the VWAP level over here. You can see the market came all the way to this VWAP level. And if you consider this swing momentum, the high of this candle to the common point between this, you can see, or you can consider this candle over here, guys. Or if you consider this swing momentum also, that's fine. So you can see the market rejecting price from 550 levels, or the market is trading below the 550 levels over here, clearly indicating some sort of bearishness. And what you can see here is that the market came all the way to 50 levels, but you can see this kind of momentum is where the market retracement is very strong when compared to the downside. So what you could have done is that the market rejected price from these levels, failed to make a lower low. Instead, the market rejected from these levels and continued further bullish towards the upside. But here again, the market faced rejection, and you can see after this kind of huge bearish candle, you could have expected the market to trade towards the downside. So you can see another rejection candle over here. So in case if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted all the way to the 100% move over here. This is the 100% move where you could have easily targeted, or you could have seen support at the zero point 0.5 as well as the zero point 0.6 level over here. You can see a clear support at the zero point 0.5 as well as the zero point 0.6 level over here, clearly indicating some kind of support over this zone, guys. The zero point 0.5 as well as the zero point 0.6 level. You could expect some kind of support at these levels and the market trying to move further towards the upside. So even though the market broke the structure, guys, after this kind of momentum, you could have expected price rejecting from the VWAP levels over here. This is the daily VWAP level, and you could have expected further continuation of price towards the downside. But what actually happened is the market broke this structure towards the upside, clearly indicating a chalk formation. And if you consider this swing momentum, now guys, the common point between this to the common point between this, the 550 levels was being broken towards the upside. And once if this 50 levels been broken towards the upside, you could have easily entered long position and targeting towards the upside. So I hope you're understanding what I'm saying. Of this swing momentum, this is actually the 550 levels, guys. You can see this impulsive candle where the market broke towards the upside with fair value gaps or imbalance. You could have easily entered long position, keeping your stop loss just below that candle, or you could have waited for retracement after this kind of chop formation. And if you consider this swing momentum, now, guys, the common point between this to the common point between this, you can see here the market didn't even retrace to 0.38 levels, or you can see here, if you consider this swing momentum, here is where the market retraced to 0.38 level, or you can consider this levels, guys, the 0.38 level, or if you consider the whole swing over here, the common point between this to the common point between that. So this aligns to 50 levels over here. You can see this 0.38 level of this swing, which is initially of this swing, and after the market breaking, again here the 0.38 level, guys, where the market is trying to take support from this 200 moving average over here and further continuation of price towards the upside. But you can see some kind of huge bearish pressure over here where the market actually broke this structure low as well, or you can consider this structure as well, where the market clearly formed a chalk formation over here. You can see a clear stock formation. And if you consider this swing momentum, you could have marked the 0.38 level or the 550 level. So if you consider the high to low of this candle, and if you try to mark the 0.38 level, this is the 0.38. You could have expected some kind of rejection from 0.38 level or at 550 levels. But here you can see clearly the market even broke 550 levels as well as the 0.38 levels towards the upside. Or in case if you try to plot the anchor gap level, you can see the market here taking support and rejecting price from these levels. And looking at this 200 moving average support also, you could have easily entered long position here, somewhere here, guys, keeping your stop loss just below this levels itself and targeting all the way towards the upside. And for target levels, you could have easily drawn the swing momentum over here, and you could have targeted the 2.68 level. You can see this is the 2.68 level where you could have targeted. Or in case if you consider this swing momentum, now guys, this swing momentum where the market retraced. So if you try to plot the Fib extinction levels of this swing momentum, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level here. You can see how the market came all the way to this 1.68 level. This is where you could have targeted, guys. Clearly taking long position here, even though there was significant selling over here, guys. Even after this kind of bullish momentum, you can see price taking support from this 200 moving average, clearly signifying some sort of bullishness, and the market is trying to head higher. And in case if you consider this swing momentum, where the market might face some sort of rejection here and continue further selling towards the downside, instead the market broke towards the upside, guys. You can see how the market here after this kind of swing momentum, you could have expected price rejecting from these levels and continuation of price towards the downside. But for these levels, guys, you should always wait for the 50 levels. You can see after this retracement, guys, what you could have done is to plot the swing low to swing high over here, and you could have marked the zero point 0.5 levels over here or the neckline over here. Once if the market rejects price from these levels and breaks the 50 levels of this retracement or the neckline level, only then you can take short position, guys, or else it's not a good risk to reward ratio for you to take short positions. If you take short position here, guys, you can see how the market manipulated these 50 levels with the market. You could have even plotted the breaker block level also. You can see the market here showed some kind of breaker block level, clearly signifying some sort of resistance over here. And you could have expected the market to aggressively sell towards the downside, guys. But what happened is that the market broke structure towards the upside, and you can see this kind of momentum towards the upside, guys. How bullish the momentum was towards the upside. And if you try to plot anchor way up level, you can see anchor way up level also forming some sort of support over here at the bottom levels, clearly signifying some sort of bullishness. So I hope you're understanding, guys, what I'm saying. The zero point 0.5 as well as the zero point 0.6 level is always a profit booking zone. So you can see the market came all the way to these levels, rejected price from these levels, and again continued and broke structure towards the upside as well. And what you could have done is that you can see again the market. If you look into this kind of swing momentum where the market here broke the structure towards the upside, clearly indicating a break of structure. So you can see a clear break of structure, guys. And if you consider the common point between this to the common point between this, you can see price taking support from 50 levels over here. You can see clearly this is the 50 level, guys, where price is kind of taking support. And in case if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level, or you could have targeted the 1.68. You can see the market rejected from these levels and continued further selling towards the downside. But definitely you could have considered this support over here, guys. And this is my trade analysis in Bank Nifty, guys. I hope you understand. There was no clear price action here, but definitely the market here was targeting the market sentiment is bullish only, guys. So one thing what we need to keep and remember is that, and the price action here was not following as per our guidelines since the market was very bullish and market is trading above the 9 as well as the 21 moving average. Based upon your risk to reward ratio is what you need to trade, guys. In case if you might have taken short position here, guys. So a lot of people might have taken short position here because you can see after this kind of huge bearish momentum towards the downside, the market kind of moved in a very balanced way all to this level. But here the market could have rejected price and continue further. So the first thing what you could have done is to mark the zero point 0.5 as well. Once the neckline has been broken or the mid of the neckline, the mid of the retracement has been broken towards the downside, only then you could have taken short position. But here you can see the market didn't even retrace to the mid of the neckline as well, guys. So instead you could have accepted a very small stop loss in case if you might have just hold it on to your trade. You can see this kind of momentum towards the upside, guys. You could have blown your account. With this kind of momentum towards the upside, it's very difficult for uh, to digest the trades, guys. You can see how the market aggressively went all the way towards the upside here. So it's better to accept a small stop loss rather than like looking at these huge losses, guys. It's a very energy driven and it's very difficult for anyone to look at losses in case if you might have been holding on, expecting the market to reverse, guys. Clearly, the market is targeting all those sellers who might have entered here. And what I need to mark you here is that the market, this 200 moving average support over here, clearly signifying some sort of bullishness. But let's look into Nifty 50 trade analysis and see how the market here in Nifty 50 behave. You can see the rejection candle over here, guys, clearly signifying some sort of bearishness. And what you could have expected is the market retracing to this 100, 200 moving average as well as a 21 moving average and aggressively selling towards the downside. So this is what we could have expected in case if the market sentiment would have been bearish now, guys. The 200 moving average price rejection or the 21 moving average or the mid of the first candle. But what happened is that the market here found a channel pattern over here. You can see a clear channel pattern over here and the market breaking structure towards the upside. And what you could see here is that here the price action though is not as clearly defined as in Bank Nifty, guys, but definitely let's look into this trade and see how the market here behaved. After this kind of huge bearish momentum, guys, the market, we could have expected a downward momentum, but instead the market broke towards the upside, even closed above this zone. So what you could have done is that you can see this kind of candle breaking towards the upside after this kind of huge impulsive candle breaking the 200 moving average, the 9 moving average, as well as the 21 moving average towards the upside. You could have easily taken long position here, keeping your stop loss just below that candle itself and targeting towards the upside. The first target is at this swing high here, is where you could have easily targeted. And you could have tried your stop loss to this swing low. And that's how you could have easily traded, guys. But what happened here is that again the market rejected price from these higher levels and aggressively sold towards the downside. And you can see this kind of momentum towards the downside. And if you consider this momentum over here, what you could have seen is that again the market here formed a channel pattern over here. You can see this kind of channel pattern, which I have already mentioned to you, this kind of channel pattern. This downward channel is bullishness, guys, and this upward channel is bearishness. And what you could have done is to take short position here, keeping your stop loss just below that candle itself. And you can see this kind of huge bearish candle. Excuse me, guys. After this kind of bearish candle, you could have kept your stop loss and targeting all the way to this low. You can see you could have targeted all the way to this low, guys. Or you can see after this kind of huge bearish momentum towards the downside, the market rejecting price from 0.38 level over here. You can see this is the 0.38 level where price is rejecting from these levels. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the zero point 0.5 as well as the zero point 0.6 level. You can see this is the zero point 0.5 as well as the zero point 0.6 level, guys, where the market here came over here. This is the zero point 0.5 as well as the zero point 0.6 level, where the market came all the way to this zone and took support from this zone and continued further bullish momentum. You can see the market here, the 0.38 level over here. The market broke stock formation over here. You can see this candle, guys, clearly signifying some sort of bullishness, where the market, if you consider this swing momentum over here, once if this zero point 0.5 levels been broken towards the upside, you could have easily entered long position here, targeting all the way to this swing high also. But what you can see is that this momentum, guys, which actually broke structure here, the initial chalk formation. And if you consider the order block level, you can see this is the order block level, guys. Or if you look into a 5-minute time frame and see the swing low to swing high over here. This entire momentum here is an order block. So what you could have considered is this fair value gap also, where the market would come and mitigate this fair value gap. And the market after mitigating this fair value gap price and order block below, you can see the momentum towards the upside, clearly indicating some sort of bullishness. Again, the market head towards the downside. And what you could have done is to mark the high to low of this candle. And once if this 50 levels being broken towards the upside, you could have easily taken long position. So here you can see this candle which actually broke and closed above these levels. This is where you could have taken long position, keeping your stop loss just below that candle itself. And what you could have done is to target this swing high or this swing high or in case if you try to plot the fib extinction levels of this swing momentum, guys, the let's try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted all the way to 1.68 level. You can see, guys, this is the 1.68 level where you could have targeted it and keeping your stop loss just below that candle itself. And you could have waited for confirmation, only then you could have entered, guys. So this is in confluence with the Nifty, Bank Nifty also. As you can see, here the market is trading above the 921 moving average, above the anchor wave up level, above the 200 moving average, above the day VWAP level. Everything is in confluence at this momentum. And if you consider Nifty 50 also, even though the market here at this momentum was trading below the 200 moving average, below the daily VWAP level, or you could have easily entered at this position where the market broke the VWAP level as well as the 200 moving average towards the upside. You could have targeted another long position over here as well after this break of the structure, keeping your stop loss just below this candle and targeting all the way to the 200 above the 1.68 level. This is how you could have targeted, guys. So that's it about Nifty 50 and Bank Nifty trade analysis, guys. Definitely the price action here was not as good as what we have expected it, but definitely based upon risk to reward ratio, you could have traded it and made a decent amount of profit, guys. In case if you find my videos helpful, please like, share, and comment, guys. Share with your friends and family, and please leave a comment below in case if you find my videos helpful. And if you want to keep in touch with me, Instagram is a way to go, guys. So message me over there. I would be glad to accept you. Thank you, guys.